Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one probably. You're at 4.2%. That's, I know that's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a very healthy unemployment rate. And anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. It's, we're right adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be, their wage increases rather, are still just a bit above where they would be over the very longer term to be consistent with 2% inflation, but they're very much coming down to what that sustainable level is, so we feel good about that. Vacancies over, per unemployed is back to what is still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person as measured. It's now below around 1, but that's still a very good number, I would say. Quits have come back down to normal levels. I mean, I could go on and on. There are many, many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change particularly over the last few months. And, so what we say is as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data, the usual. Don't look for anything else. We'll see another labor report. We'll see another jobs report. I think we get a second jobs report on the day of the meeting, I think. On the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. It's always a question of look at the incoming data and ask what are the implications of that data for the evolving outlook and the balance of risks, and then go through our process and think what's the right thing to do. Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we'll be doing.
Thanks. Hi, Chair Powell. Neil Irwin with Axios. We've only been running a little above 100,000 jobs a month on payrolls the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side. And on the beverage curve question, yes. So we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I think we are. It's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment. But it's been a great ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting lower employment.
Thanks, Chair Powell. Edward Lawrence, Fox Business. So we've heard some speculation that you may be going with the federal funds rate to 3.5, maybe under 4%. And there's basically an entire generation that has experienced zero or near zero federal funds rate. Now, some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
So this is a question, and you mean after we get through all of this? It's just a great question that we can only speculate about. Intuitively, many people anyway would say we're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates, long-term bonds trading at negative rates. And it looked like the neutral rate might even be negative. So people were issuing debt at negative rates. It seems that's so far away now. My own sense is that we're not going back to that. But, honestly, we're going to find out. But it feels to me that the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we know. We only know it by its works.
And one more. How do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
Yeah. So this is my fourth presidential election at the Fed, and it's always the same. We're always going into this meeting in particular and asking what's the right thing to do for the people we serve, and we do that, and we make a decision as a group, and then we announce it, and that's always what it is. It's never about anything else. Nothing else is discussed, and I would also point out that the things that we do really affect economic conditions for the most part with a lag. So nonetheless, this is what we do. Our job is to support the economy on behalf of the American people. And if we get it right, this will benefit the American people significantly. So this really concentrates the mind, and it's something we all take very, very seriously. We don't put up any other filters. I think if you start doing that, I don't know where you stop. And so we just don't do that.